and this shouldn't be a surprise, like Bitcoin is still king. I mean, even with everything you've ever heard, all the hype, and even how flawed the metric is, the Bitcoin dominance is still what, 58% as of today? Still more than half of the entire rest of the space combined, right? So that shouldn't surprise anyone. I would say from a pure institutional investor, keep in mind, like when I say institutions, a lot of who we're trading with are like active trading, intelligent market participants, not just like, old stodgy guys who like put in a percent. There are some of those too. Yeah, but like a huge part of our client base is other crypto funds, for example. Like those, they're trying to trade and make money, right? So like there's plenty of interesting, but if we take your question, Paul, more to mean like, pensions, endowments, very long-term investor types, I think it's still pretty much Bitcoin and then a couple others. And some might just do Bitcoin only. Some will do like 2/3 Bitcoin, 1/3 ETH, or you can just also look at like the Bitcoin ETF AUMs and flows versus the Ether AUM and flows, and it's just not close. And in fact, till this run that Ethereum has been on the last like 3 months or so, I mean, Bitcoin ETF flows were wiping the floor, like way above in a ratio than even the Bitcoin market cap to Ether market cap. Like it was Ethereum ETFs until basically May were underperforming Bitcoin ETFs, even relative to its much smaller market cap.
Right.
It's just recently that Ethereum and in Ethereum's defense, like I think 6 weeks in a row, starting in mid-July, Ether ETFs took in more than Bitcoin ETFs, which is astonishing given that, Bitcoin is, 3 or 4x its size, right? So like, I would say there is interest. I mean, most institutional long-term investors are not dogmatic about picking one asset. They're not invested in one stock. They're not invested in one asset. Sure, they're mostly picking Bitcoin still, but you absolutely see diversification into, the other big assets, the Ethereums, the Solanas, et cetera.
Right. You look at the world from all these regulatory perspectives. Obviously, you've got the Genius Act, Clarity Act. You got the CFTC and the SEC now, kind of trying to parse out who's going to regulate what. And this voice keeps telling us that we want to clean up this industry. We want to make it regulatory compliant and yada yada yada. But then at the same time, you see a Doge ETF that is linked to, I believe it's linked to a derivatives market. It's not even spot Doge. And we all know the history of Doge. Like how does Wall Street justify this being like a legitimate ETF? Or am I just seeing it wrong? I mean, to me,
surely Doge isn't the worst one you can come up with, Paul.
Sure, it's just the most current one that I'm aware of.
Look, Dogecoin is a proof of work coin with no pre-mine. It's a coin with no purpose. It's the original meme coin, but it is a Bitcoin fork. I mean, in my mind, actually, not that I think I'll get your broader point, which I'll address, but just in particular, in fact, if people want to learn about Doge, go to dogmoney.info, which links to my fantastic 2021 paper about Dogecoin, where I called it the most honest shitcoin. That is the title of the paper. So I actually like Doge. I mean, not that I'm saying you should buy it or invest in it, and I don't currently own any Dogecoin, but I think that, but that's not even, that's
I guess that, I think you hit the nail on the head. Like, how does Wall Street find value in a meme coin?
I'm not sure it does, right? I mean, and that, I think that's okay. Like, you have a free market. This is the difference here. The SEC is not trying to make prescriptions about the quality of legal assets, right? And I think, how do we justify, XYZ company that's a really bad company? You don't justify it. You don't have to, agree with every company that lists on the NASDAQ that it's a good company to believe there should be a free market, right? And so I think there will be plenty of cryptos. There are plenty of cryptos, and there will be plenty of securitized wrappers for cryptos, whether it's ETFs or DATs or whatever, that are not looked upon fondly and don't broadly give a good, reputation to our industry. Like that's always true, right? And
that's a good point. That's a good point. As long as they're following a clear regulatory path to get to market, they're not breaking any laws, then the market will decide whether it's valuable or not.
Yeah, I mean, that's my view. I mean, if you ask me to recommend something and I think it's really bad, surely I'm not going to, right? But like, I believe the market should clear this up. If somebody on our platform wants to, like, if an institutional investor wants to hold fart coin, like, that's on them, like, if fart coin's legal, if it's legal to offer and there's demand for it, then I don't see why even a Galaxy, for example, or any intermediary should be prohibited or feel bad about offering something that's legal in the market that people want.
Right.
Promoting
Pets.com was legal.
That's right. And by the way, I don't think that's going to be the case for Doge or Fartcoin probably, but Pets.com was totally a good idea. It exists today, basically. Right. Amazon does that, right? It was early.
It was just early,
I think there's a lot of stuff. Crypto's gone through this so many times with these hype cycles, but like oftentimes when there are bubbles in something, and there obviously have been crypto bubbles now and Bitcoin bubbles, there have been. I don't know of any bubble that, tulips didn't have a second, third, and fourth bubble. Like, it says something that Bitcoin yet keeps making new all-time highs. It's surely there's something real there. I look at critics of Bitcoin today. Stephen Hanke, the professor, is a great example. He's still spouting the same things he said in 2014. Yeah. Surely something about your analysis must be off, Stephen, if Bitcoin came back and made new all-time highs like 6 more times. Right. So I don't know that, like, those but so bubbles though often have there's something real there. There's some reason why people, the US markets and US investors were not wrong to be excited about the internet in 1999. They were totally right. They just got a bit ahead of their skis. But now if you look, now you zoom out and look at that bubble, and it's a little blip on the market value that's been added to the US economy from all of the internet. I mean, it's hard to even just imagine life today. The internet is like oxygen. You can't live without it, right? We couldn't talk right now. I mean, remember that video of I think it was Bill Gates talking to like what's his face?
Was that like Oprah
Late Show guy?
Oh, David Letterman.
Yeah, he was talking to Letterman, right? And he's like, yeah, you're gonna like listen to like radio on the internet, and Letterman's like, what are you talking about?
Yeah, exactly.
I mean, it's just so I
and that's so funny because I do that all the time. I actually was had just kind of started my finance career at Payne Weber during that era, and I remember, just since it was the first time I'd ever experienced anything like that, just going like, how the fuck are these 15-second cat videos that take 10 minutes to download ever going to be anything? Right. And so it's very easy to, like, I look at crypto and I'm very, I critique it pretty hard. There's a lot of 99% of what I've seen has just been garbage, but I can't deny the fact that somewhere, somehow, something will probably emerge out of this mess of garbage that is game changer.
Yeah. I mean, I can make a case for, I had mentioned this at the top. I think there are for sure two that already have product market fit outside of Bitcoin, and it's stable coins and DeFi, specifically lending and trading permissionlessly. My whole argument about DeFi, and one reason why we wanted to tokenize Galaxy stock, and why I really am big in trying to tokenize equity securities in particular, is that these things are great. Like, DeFi is really good. It's just that most of the assets suck. Like, they're either, I mean, what are most of the assets? Either like the gas token for yet another L1 blockchain, right? Or some other useless token or whatever, or even scams and grifts and meme coins. Who knows, right? Not all of them are bad, to be clear. I mean, obviously, but like, if we could improve the quality of the assets that are on blockchains, then I think you'd see like DeFi in particular become essential to global markets.
I agree with that. I think and maybe you've already looked into this, but I saw recent announcements from NASDAQ that they're going to move to 24/5 trading. I would assume that's going to require stable coins and tokenization, because I think they were also talking about using blockchain for settlement. So to me, that sounds like T0 finally making that concept finally making it to the NASDAQ. So do you see that? Is that the future you see, where all the big exchanges are going to go tokenized, stable coins, which obviously is going to make the treasury happy, because if there's a trading pair on all these big exchanges that's a tokenized digital dollar, they're going to be selling a ton of treasuries. So how do you see this whole relationship forming? And am I painting a decent picture of that, or do you have a different view?
Yeah. No, I think you are. I look again, my Bitcoin friends, and I am like at my core a Bitcoiner, to be clear, and I love Bitcoin, I think it's the only crypto asset I own. But that people have been, they're skeptical, and I get it, because there's been a lot of attempts at things like tokenizing real estate and other stuff that just hasn't gone anywhere. And it's tokenization, and blockchain has been this, like, it's like Ahab's white whale. He's always searching for it. It's the holy grail. You're always looking and you never find it. Like, I get that. It's had a long history of failure, right? And
Right.
I think a lot of that failure was partially due to regulation and making it impossible to really put the things that could be valuable. Putting a house on the blockchain, I don't know. Maybe there's some value to that, and in the real estate market, I'm not sure. But I know that if you lose your cryptographic keys, God doesn't reach his hand out and take your house keys out of your pocket, right?
Yeah.
Like, tokenizing a physical asset it could bring some value. I get it. You're really just improving the record keeping or automating the record keeping of ownership. That could be valuable. I don't think it's like a game changer personally. But equity ownership is by definition intangible, right?
Mm-hmm.
Other things are too, by the way, like intellectual property is an intangible asset. I think personally that these intangible assets could be riper, technologically speaking, for having their ownership and settlement transferred and recorded on a blockchain. I think because they're already digital. I mean, what's the difference between what do you care, Paul, if the DTCC says Fidelity has 1 million shares of Apple and one of them is yours, versus if Fidelity says, well, we're holding the token that is his ownership? To me,
right,
it actually absolutely, public blockchains in particular represent high security record keeping, and that could be very appropriate for equity securities.
Well, and that's interesting. You said the DTCC, because immediately one of the values that I saw with having tokenized assets on these exchanges is the ability to take self custody and withdraw your tokenized securities from the DTCC.
Right.
Do you think that these exchanges will go that far eventually?
Well, I mean, the way we've designed the tokenized Galaxy stock is that you are self-custodying it.
That's awesome.
Effectively. And I can get more into how we designed that, but yes, I think that's an interesting thing you can do, and stable coins are similar in a way as well, right? Like, where what you hold is a liability, right, to some issuer. That's what stocks are, right? And so they'll never be like permissionless in the same way that Bitcoin can be, right? Like, because Bitcoin is a liability to no one by definition. It's a digital commodity. Stocks are not digital commodities, right? Like, if and same thing with stable coins, right? If you have a bunch of stable coins, but then I don't know, you're determined to be a murderer or a criminal or whatever it is, the government is going to call up your bank and say, freeze his bank account, and then they're going to call up Circle or Tether if they know your address and say, freeze those coins. Like, they can do that, right? And they can do that with stocks too, right? And
they can do that today as we sit with just digital dollars.
Yeah, and they are doing it today, to be clear. They're doing it on stable coins when the law, I mean, Genius Act puts in some decent, clear requirements that there be like real legal service. Like, they're not supposed to be able to just like willy-nilly call up stablecoin issuers and steal your money, which is, good that they can't, that they shouldn't do that. They should only do it to criminals when legal, process has been done. We have a good legal system in the United States. So, like, you have to put some faith in that. The same thing's true for stocks. You don't permissionlessly own your stocks, yet you still might prefer to hold whatever it is yourself. And I think that is better. Think about digital dollars today, like, money in a Cash App account is custodial.
Yeah.
Right. It doesn't mean that like a stable coin that you self custody doesn't have any liability. Sure, it has some, but in my mind, I think it is meaningfully more self custodied than
I was
dollars
thinking,
on a screen.
So like when I was in I don't know if it was after UBS bought PayneWebber or not, but Dole, when Dole went bankrupt and there was like 30% more shares in existence, or 30% more shares that were claimed in the bankruptcy, and we know today like naked short selling is an issue. That's obvious. And if people could take self-custody, I wonder if some of those problems, those rehypothecation and naked short selling problems would at least become less prevalent.
I think it's such an interesting point, because the way Galaxy tokenized Galaxy works is what you're actually doing if you want to cross this bridge we've created, if we call it a bridge. You are going to your brokerage. You have to already own it to move it, and that makes sense. You're going to your brokerage, and I put this in our paper, a screenshot of me telling my Fidelity, like just chatting with Fidelity.com. And I was saying, can you DRS these shares to the transfer agent? And that's literally all you have to say. So it's the direct registration system. It's a mechanism by which you can move shares out of a DTC account and ledger them directly at the transfer agent, meaning the issuer's transfer agent. So for example, so that would be Galaxy's transfer agent, right? And so what we are doing is we're moving them out of Fidelity's omnibus at the DTC, and instead we're creating an entry for me on Fidelity's own book, on Galaxy's own books and records that says Alex owns it. And this is something that you can do. It's pretty rare because holding stock on the company's records itself is not that useful. It's no longer connected to an exchange. It's a pain in the ass to do stuff with, right? But it can be done, and companies will do it sometimes. Take this example. If we acquire a company, or if a publicly traded company acquires another company or employees, and as part of the acquisition pays them in their own stock, right? Oh, we'll buy your company and give you some stock. Well, they don't know the brokerage information of every employee at that acquired company. So what they usually do is just put the stock on their own books and records in their name. And then if that person, that now employee, acquired company, or whomever wants to go get the stock and move it back to Fidelity, they just call up the transfer agent and do that, right? So but to your point about naked short selling, so our process involves moving the shares onto Galaxy's own books and records, and then we've hired a second transfer agent called Superstate, which then can create tokenized versions of the shares. And they're not like wrapped shares. Like basically they're sitting now in your Superstate account, which is one of our transfer agents. And they can say, like, do you want tokens for these? Literally, you can tokenize. And then they watch the Solana blockchain. And as they move around between allow listed addresses, so everyone is KYC that can touch it, then they just update. That's whoever holds the token at any given moment is how they represent our master securities file to the right.
So they can trade peer to peer. Can they trade? Can they trade with a new entity that goes through the KYC? And
if you go in KYC, that's right.
Superstate or whatever.
Superstate has to know who you are, because otherwise we can't maintain our own books and records. If you think about it, it's totally logical. But hold on, I want to make this point, because we're using this transfer agent thing as the way to get the shares onto the blockchain. One of the only other times that people have moved shares en masse to a transfer agent was GameStop. It was all the GME holders were worried about Fidelity and Schwab and Robinhood and whomever lending out their shares to short sellers. And so they were DRSing their shares to the GameStop transfer agent so they couldn't be used for shorts, right? Gotcha. And that is true. Like, you can't, Fidelity or any brokerage can't borrow my Galaxy stock to lend to a short seller in a margin, if I have a securities lending agreement or whatever, if they're not there. I think it could have an impact there. If the method by which we're tokenizing our stock becomes like widely used, right? You could imagine it. It would alter the landscape of just where stocks are held and why. Right now, as we talk here, in September, there's like 66 on-chain holders of our stock, and about $1.1 million worth of Galaxy stock has been tokenized. It's not that much. It's a small, tiny percentage of our float and our owners, right? And that's because you can't do much except for what you said. You can hold it. You can trade it bilaterally, which is not that easy, right? There's a reason why people trade stocks on NASDAQ. It's great, right? I think we're hoping the SEC will give some more clarity and even possibly exemptive relief to allow like decentralized exchange trading. As I mentioned, that's one of my main impetuses for putting stocks on chain, is because I do think a lot of the applications that have been built are brilliant and neutral and transparent in ways that TradFi equity tech stack is not. And so I think some great stuff has been built in crypto. We've just been sort of putting our crypto and things, as President Trump said, we've been playing with these cryptos and things. And gosh, it'd be great if we could play. So I think stablecoins bring a lot of value. If you've ever sent a wire and also used a stablecoin, then you know that stablecoins are much better. And I think, if we can get the quality of assets up on chain, then people will start to see that blockchains are actually, they've been sort of training wheeled with like
Right.
all of these sort of okay assets. Some of the assets are good, really good. I just mean a lot of them are were just speculative, right? And if we could get better assets in there, then they would be it would, I think you'd see the power of DeFi personally.
Right. Yeah, no, and I saw recently that NASDAQ made an investment in Gemini. Which
yeah, I saw
like,
that.
I just these arrows pointing at, okay, NASDAQ's going to become a direct competitor to Coinbase with tokenized securities in addition to crypto.
Well, because it's not just that. The worlds are converging, right?
Yeah.
Because the Galaxies and Coinbases and Krakens are all trying to move into securities in one way or another, right?
Mm-hmm.
Like we're trying to tokenize securities, as we've talked about. But they're also moving towards crypto. It's kind of like, and there was kind of like this, I don't know if it was a bargain. Obviously, I don't think anyone met in a room or whatever to do this bargain, but it's kind of like the sort of crypto native world gave Bitcoin and Ether to Wall Street in the form of ETFs in exchange for higher prices, or they took them, right?
Uh-huh.
That's basically what happened. And now I'm saying, well, we want stocks, and like if you're not going to give them to us, both sides are pushing in both directions.
Mm-hmm.
And I think somewhere it's unclear exactly where this will end up, right? Like, will stock trading look like crypto trading? Will cryptos start trading on the stock market?
Mm-hmm.
I mean, because one of the other things that came out was that the SEC clarified, the SEC and CFTC clarified, they said, just in case you didn't know, actually, there's nothing preventing a national securities exchange, i.e. NASDAQ, from trading spot cryptos.
Right.
So you could see a world where you're buying your stocks through Galaxy and Coinbase and you're buying your Bitcoin on the NASDAQ. Like that's totally possible.
Right.
It's some convergence. And I think both sides have a lot to learn from each other. And so the future is probably somewhere in between. I don't know how close, like, is NASDAQ going to be able to defend a moat where it's everything they currently do, but somehow there's tokenized stocks? I think doubtful. I think somehow we're going to move towards each other. And I don't know where that point is, but that tussle, I mean, they definitely have things to learn from blockchains. Definitely. Yeah. And as I've argued, I think we have things to learn from equities. Like, I mean, I think there's some middle ground to be found.
So you've heard Bitcoin is the new gold rush by now. As world leaders on all sides have endorsed it as the future of money, and now you're looking to get started, we'll show you how. It's actually easier than you think. First, go to your nearest Byte Federal ATM and turn your cash to coin. Byte Federal has over 1,200 locations around the country with the highest daily limits. Go to our website, bytefederal.com, to find the nearest ATM to you. Log in to any wallet, then create an account, deposit your US cash, and instantly convert it to Bitcoin. That's it. We are the only US manufacturer and operator in the Bitcoin ATM industry, and our US-based live customer service is second to none. Go on, give it a whirl, and don't get left behind. Click the link below.